Should you or shouldn't you? Long-term care insurance is probably one of the most controversial topics in retirement planning today. Let's talk about it. Welcome to another episode of Coach Nick. I am so glad you're with us today. We are going to break down one of the most controversial topics in retirement planning today, long-term care insurance. Should you? Shouldn't you? Some people say it's a non-negotiable must-have. Some people, it's never going to happen to me and I'm not going to throw away my money. Which is the correct answer? Where do you land on this? Let's break down long-term care insurance today. It's 2026. What is the reality of that industry today? What's that reality for seniors today? What was 10 years ago, 15 years ago, 20 years ago? It's outdated. New data, new products, new solutions, and perhaps new mindsets are needed in today's world. In our conversation today, we're going to talk about the thing that is just frustrating everybody, from retirement planners, insurance agents, clients, the general public. No one seems to really love long-term care insurance. When I think of those words, I don't know, a little nausea, a little Pepto needed. It's not fun to talk about this topic, but it's necessary. Here's the reality. We're living longer than we've ever lived, and for many of us, our minds are staying with us, but our bodies are wearing out. Others, like some current family members, their bodies are strong, but their minds, they're not where they used to be. In both instances, they need help. They need care. Long-term care was designed to really help somebody in those last several years where they really needed that assistance. Here's our challenge today. Insurance companies don't know how to price it. They really did themselves some harm when they were pricing those products in the 90s and the early 2000s. They expected people to die faster, not be as sick, not make as many claims. So these super rich policies existed for a fraction of the cost they are today. We're all in a scramble to know what is the right thing to do. If you're thinking about long-term care insurance, let's run through what our options are. You really have three ways of thinking about long-term care today. Number one, you could self-insure. This is where you're typically working with a professional who's knowing your numbers. They're running the math and they're saying, you know what? If there was that long-term care incident, there was that need, you have sufficient assets, pension, Social Security, retirement income that you could support yourself or your spouse with care, and you wouldn't cause harm to the spouse that doesn't need care. That is self-insured. For some people, they are going to determine to partially insure. They're going to identify that they have certain retirement income and assets that can cover, part of the risk, but they want to sleep better at night by outsourcing part of the risk to a third party, like an insurance company. Is that you? Are you the first option or the second option? Maybe you're the third option. Option number three. These are people many times who have experienced risk with their families, where they've seen their family members with dementia, Alzheimer's, having extended care needs, really kind of blowing all of the assets on that person that needed the care, which left the surviving spouse almost in poverty. Option number three is about fully insuring, trying to outsource or give away as much of that long-term care risk as possible in the name of protecting their loved ones. Which one's right for you? It's a knowing your math thing. It's trying to find the right solution for you kind of thing. Many times it might be a second opinion thing. A lot of our need for long-term care comes from a lack of understanding of what's covered and not covered, how it's priced, what it actually does for you. Many times people think that Medicare is going to pay for things that long-term care would pay for. And unfortunately, when they get to that point in life, they're left disappointed and their families are left scrambling. In getting a second opinion, what you're really doing is you're saying, I understand that one long-term care event could radically alter my retirement plans. It could radically alter the plans and the future of that spouse I care about and I love. You see, long-term care insurance really isn't about you, the person that needs the long-term care insurance. It's really about protecting that spouse that's going to be left afterwards. Are they going to be left in a good scenario with good economics that they can continue to live that retirement life that you've both built? Or are they going to be scrambling and I'm not being ugly, are they going to end up in the kid's basement? That's the reality for a lot of people. I've met them, I know them, and that might be you in our audience today. And I'm so sorry if that's your story. I'm so sorry if that's where you find yourself today. Do you have a long-term care policy? Have you wondered, how do I make this thing work? If there did come a time I had a need, how do I actually activate it? There's a really important term that you need to understand. It's called activities of daily living, also called ADLs. These activities of daily living including bathing, dressing, eating, toileting, continence, and transferring. In order to activate your policy, you need to not be able to do 2 ADLs. So 2 of the 6 is what many of these long-term care policies are looking for. Additionally, cognitive impairment, that today could also make one of these long-term care policies go into force to qualify for benefits. A lot of people are concerned because you think about long-term care and you just think about maybe memory care, you think about nursing care, but long-term care pays for so much more than that, including home health care. Recently, I've had loved ones take full advantage and use of home health care. From different skilled nursing to advocates, there's been a lot of advantages in having your loved ones at home and receiving the care they need. That's not the best thing for everybody, but it's certainly nice to have the option. Why has long-term care insurance become so controversial today? Well, let's go back to the earlier comment about it being mispriced. You had so many wonderful actuaries trying to price these things when longevity was shorter, people died faster, and there was less commitment on these insurance risk pools that they were going to have to pay for these rich benefits. They mispriced these policies. And because these aren't fixed costs, they kept jacking up the prices and diluting your benefits. Even though you bought a policy 10 years ago, they're pricing you out of the policy today. Is this you? Do you know someone that this has happened to? You paid for a policy for a decade and now you can't afford it because they keep increasing the price? That's just wrong, but that's the reality. That's why these things have such a black eye today. Now, that doesn't mean you shouldn't have one, but we should shop prudently and understand how these things are priced. We should understand what is the history of these companies with these products adjusting the prices. Are they giving you the benefits you actually need or want? A lot of questions need to be asked for us to feel confident that we're making the right decisions. Long-term care insurance could be a prudent investment, but long-term care insurance could also be damaging to your finances, your pocketbook. So seek wise counsel, get a second opinion. Is the long-term care policy you currently have, is it still worth it? Or should you consider a long-term care insurance? If you're in the market today and you're thinking, I'm in my 50s, I'm in my early 60s, should this be a part of my retirement plan? Seek wise counsel, get the second opinion. One of the other challenges with traditional long-term care insurance is qualifying. Will I qualify for long-term care insurance? If you already have some pre-existing conditions, maybe you already received a bad diagnosis, maybe traditional long-term care insurance, that's not in your story. Maybe that's not going to be a part of your plan. But there's good news. There are other solutions that exist today to assist with those long-term care events if you can't do 2 of the 6 ADLs. Well, the insurance company has gotten savvy. They've created new products that many times consumers don't even know exist today. Do you know about all the alternative long-term care products that exist today? Well, let's talk about them. There are hybrid long-term care insurance policies today, such as life insurance chassis that have long-term care riders. There's also annuities today that have long-term care riders. Now, here's the deal. Are they as lucrative as the traditional long-term care policies? Yes and no. Sometimes they don't cover quite in the same way as traditional long-term care. However, many times these annuities and life insurance hybrid policies are not use it or lose it. Whereas the traditional long-term care policy, most of them, not all of them, if you don't use it, you lose it. All the premiums you baked in, they're gone. Now, why are we bringing up these hybrid policies? A few reasons. Number one, an underwriter for a life insurance product, many times they're looking at what is your longevity. You see, they want you to pay premiums for a really, really, really long time and not die, right? Like insurance companies are not non-for-profits. They know how to make money, okay? Whereas long-term care insurance policies, they want you to pay and pay and pay and never use it. Or if you use it, they want you to die very fast. I know I'm being a little bit crude, but you get the picture. They are looking at your life and your mortality in 2 very different ways. So on one hand, if I've got a life insurance policy that has a hybrid long-term care rider on it, it's going to pay me if I die with a death benefit. It's going to pay me if I live and I have a long-term care event. And many times they build up cash value. That means I might have access to cash, tax-free cash in many instances. So it's like I have access to money in 3 different ways. I'm not saying that that's the right plan for you. What I'm saying is you have an option or an alternative to traditional long-term care. And then you have annuities. And there's all kinds of stuff about annuities. I'm going to say annuities, there's the good, there's the bad, there's the ugly. There's the dinner seminars you're invited to 100 times a week where they're going to sell you a red annuity or a blue annuity. I'm not talking about that trash, that garbage out there, okay? What we're talking about are the long-term care riders that exist on some basic annuities out there that might provide a benefit for cash flow in the event you needed long-term care. Look, not everybody's going to qualify for the traditional long-term care policy, the life insurance policy, or even the annuity. The important thing is that you should know as a consumer that there are options out there, and getting second and third opinions is just the prudent thing to do. Here's the reality. Many times, traditional long-term care insurance does have a benefit these hybrid policies, these alternative long-term care policies, don't have. In the state of Georgia, as an example, there's something called the partnership plan. And a partnership plan product, what it allows for you to do is it basically says to the extent you protect yourself with benefits in the traditional long-term care policy, and you've got to meet some criteria, you can protect that amount of assets for your heirs or your surviving spouse without having to spend all of that down and then qualify for Medicaid. So there is the ability to protect personal assets through the long-term care, the traditional long-term care policy that we don't see in the non-traditional or alternative policies that are out there. Now, that doesn't make it right or wrong. It just means you should understand there are pros and cons to all of these policies. In your retirement, long-term care must be discussed, regardless of what your decision is. If you haven't made a decision, by default, you have made a decision. Long-term care insurance is not a pretty thing. It's not a sexy thing. It's not a fun thing. Nobody wants to waste money, and nobody wants to use something or buy something that they think they'll never need. On the flip side, A lot of people are frustrated because they might think they need this as a part of their retirement plan, but it's cost prohibitive. They've heard really bad things about it, and many times the benefits are diluted from, the premium years, 10 years, 15 years ago, when many of these policies were quite rich. Here are some questions I want you to ponder, to think about as you're considering long-term care in your retirement plan. 1, who would provide care if you needed it? Would it be family? Would it be your loved ones? Is there a trusted family friend? Where would the care take place? Would it be in your home? Would it be in a facility? Like, where would you end up being cared for? How would the care be paid for? Do you have pension and other fixed income resources that would cover this and allow for your spouse that they don't need care, that they'd still be able to buy groceries and take care of their basic needs? Or would all of your fixed income really go for your care? What happens financially to your surviving spouse? Will they be left destitute? Will they move in with the kids in the basement? And the reality is, that's happened more times than I can count. Really. Look, hope is not a retirement plan. Hope is certainly not a healthcare plan. We should be very intentional about our healthcare decisions. And I think a long-term care conversation should be in those decisions. I know it's frustrating. I've sat across the table many times from people who are they're frustrated, almost disgusted with the plans that they have because the costs have gone up and the benefits have been diluted. I've sat across the table from people just like you, people that are considering, in my family, people have had dementia. They have had Alzheimer's. They have had needs for long-term care for a long time, and it depleted the resources. I want to protect myself, but I'm nervous about buying something that might not be good for me. Maybe you've heard about these alternative long-term care plans. You've heard about the life insurance chassis or the annuity. Like you, I'm not a huge fan of insurance until it's needed. I think about my home. I've owned a lot of real estate over the years. I've had a lot of insurance policies on those homes for years and years and years. I've paid. No claims, no claims, no claims, no claims. But there came a point in time, and if you live in the state of Georgia, you know exactly what I'm about to say. Hail damage. New roofs. At that point in time, maybe you're really glad you had the home insurance. Or maybe you're like a recent acquaintance of mine, where he's telling me the disaster that happened on Easter Sunday, where his home caught on fire. 2 years later, the home's still under construction. He's glad he's got the insurance, but man, it's been painful. The reality is we're all glad we have insurance when there is the need. What I want you to leave with today is the understanding that there are options, that if you ended up needing the long-term care insurance, you don't have to go it alone. There are ways to offset the risk. Do you have questions? You want a second opinion? We'd love to talk to you. Check out the show notes below. Click the link. We'd be happy to have the conversation. Until next time, thanks for tuning in, and thanks for staying coachable.
Investment advice offered through Merit Financial Group, LLC, a registered investment advisor.